This is the launch of a campaign by the Managing Partners Forum, which will be ongoing on the subject of external investment. As you look towards the screen, on the left you have a group of speakers who are broadly pro, and on the right a group of speakers who are broadly con. But nothing is ever quite as simple as that, is it? In the middle we have John from Noble and Company, who is going to say a few words to set the ball rolling.
I think there's sort of three key corporate drivers from the point of view of what is leading sort of today's debate and whether external equity or external investors should be invited into professional services firms. I think first and foremost, particularly for mid-sized firms, there are an enormous number of market opportunities for growth and, if you like, wealth creation. Second point is, in our view, the partnership as a concept for sort of employment within the industry is going to be increasingly more difficult, particularly at that sort of mezzanine layer of the sort of the junior 5 to 10 year qualified person, who increasingly, in my view, is going to have a greater appetite for capital return as well as income return. The last area is, I think there is a general presumption from the political environment, and particularly the regulatory environment, is that external investors are good for professional services companies. Looking at the investor drivers, first and foremost, I think there is a sort of a sea change in the quality of company and professional services company that is likely to be presented to investors over the next 3 to 4 years. Last but by no means least, though, I would just reiterate one message is I think we would see this as a journey probably into 2009 and 10. I think we have to accept that there's going to be no ready solutions probably in the next 6 months, because as again you'll probably hear, the markets are pretty horrible at the moment. So I think there's a sort of just one qualification I put to that from a specialism point of view.
Each of our speakers is going to speak for approximately 5 minutes. At the end, then I'll open it out for contributions and questions from you, the audience, okay? There are two fundamental questions that we want to pose using the keypads now, and we're going to pose them now, and then we're going to pose the same questions at the end of the debate to see whether there's been a shift in view. Number one, very interesting. Very few people strongly disagreeing. The second question, similar sort of picture. Interesting. So let's bear that in mind as the debate goes on.
If you want to stay a certain size or are happy to stay a certain size, operating in a relatively restricted geography and maybe finding a niche space, then probably there is no need or argument in favour of raising external capital. However, if you do see the strategic need to grow nationally and internationally, and you want to achieve this at a reasonable pace and at a pace that many competitors will achieve, then I believe that the option of taking external capital becomes unavoidable.
Now, I think there are two fundamental reasons for seeking external capital from investors. One is for the owners of the day to cash in at the expense of future generations of owners, and the second is that capital is needed to finance acquisition and growth in turnover or profit, which they could not do as a partnership or LLP. In our experience, there is plenty of bank finance available to partnerships if the business is well run and profitable, and if the investment proposition is sound. Now, there are two questions that were asked earlier. Therefore, one, is it right to engage, or is it sensible to engage with external investors because you are attractive to them? Well, fundamentally, no. It seems to me if you are going to engage with them, it's because they're attractive to you. So I would say no. And then the question of listing is really one, it's not for us. I wouldn't dream of saying it's not for others. I'm just sorry that I didn't bring my graph of one or two listed companies' share price over the last 6 months, because that might have helped the debate along a bit. But so there, my answers are no and no. Thank you.
Aristotle gave us the answers really to these questions in the Politics over 2,000 years ago, when he wrote very roughly that the key is not to search for the ideal solution, but to search for the best solution in the particular circumstances. First, I'd say business culture is emphatically not determined by business structure and only to a very limited extent by the nature of ownership. While we've had a corporate management structure for many years, our first managing director was appointed in 1985, we believe that we have maintained a partnership culture to this day. And by that I mean we have an ingrained habit of consulting widely and trying to build consensus around significant decisions. Our external investors have been a delight to work with. They've been supportive, intelligent and focused on the long term. And there's no accident about this. We researched them extremely thoroughly, and I mean extremely thoroughly, before we committed to go with them. I literally knew what cars their directors drove. And so I'd put it to you that there is merit in engaging with external investors in particular cases, and I'd urge you to vote in favour of the first question.
When we were a PLC, 2% of people within Whitehead Mann owned shares in the business, and the vast proportion of that 2% were senior directors in the business. Today, 40% of us have an internal ownership of Whitehead Mann, really from top to the bottom of the business. People are remunerated on a teamwork basis, which again reflects cross-selling opportunities and the way that we work together with our clients. And we passionately believe that a partnership culture and a partnership structure actually facilitates that far more effectively than a PLC listing actually did. Our silos are not as they were, that cross-selling opportunities are easier to come by, and that we are working together more effectively on clients. Now, I'm not going to suggest that moving from a PLC to an LLP is the only reason behind that, but we do believe that it was a strong factor.
I'm talking in a personal capacity for the very simple reason that this is not a topic that has ever been the subject of a partnership debate within Allen & Overy, which shows you how close a prospect it is for us at least. Some of the complexities that might face any truly global law firm embarking on this strategy begin to become clear. Leaving aside my own firm, I personally would be relatively surprised to see many of my firm's major competitors taking this route anytime soon either.
I manage 3 funds investing in UK small companies totalling about £300 million. How do you reward shareholders? How do you reward staff? And I mean, clearly that's an issue for any company in any sector. But I think it's particularly an issue often for these types of businesses, because the revenue is often very closely associated with the individual professional. In recent years, clearly businesses have become more sophisticated, and certainly a number of the stockbroking firms that have floated in recent years will have put in place within their prospectus quite rigid and complex formula to determine what the bonus pool is, not how it's split clearly, but what the share between outside shareholders and staff will be. In my own experience, the most successful of these businesses are businesses that have kept a pseudo-partnership structure within a PLC legal framework.
Okay, well, thank you one and all. It just remains for me to take the second vote on those initial questions that we posed. So keypads at the ready, if we can. Is the first question up there? I don't need to read it out again. If you could just press the number that you now think is closest to your view. Yep. And so we have seen a fall in that view. Let's see if the same happens with the second question. Wow. The disagree bar has increased substantially and the agree bar has decreased. Well, there has been a shift of view. Thank you all members of the audience, first of all, for attending this evening. Thank you to all of our speakers for taking the time and trouble to not only be here, but also think long and hard about what they wanted to say prior to attending. And thank you also to Janet, who is our host, and to Bowen Leighton Paisner for allowing us to use this wonderful auditorium. With that, I think we are retiring to the bar, which is next door. Thank you all very much indeed.